Of course, this is not financial advice and for entertainment purposes only. Here are 6 best ETFs for long-term investing in a Roth IRA. Investors, yes, a Roth IRA is one of the most powerful investing accounts for investors who want to save so much money on taxes from dividends and huge capital gains in their portfolio. A Roth IRA is a cheat code for investors to save so much money on taxes from dividends and capital gains, and to have so much money, hopefully, after decades and decades of compounding, and even after that dividend snowball is rolling with passive income. I personally have over $22,000 invested in my Roth IRA, which is basically invested mostly in SCHG, Charles Schwab's US Large Cap Growth ETF, worth about $18,000. And then I also have about $4,000 invested in VOO, Vanguard's S&P 500 ETF, where I'm up about 24.4% all time in my Roth IRA, which is awesome. I also max out my Roth IRA first no matter what happens. So I always max out that $7,000 contribution since I am 24 years old. And if I am above 50 years old, then that will be $8,000 for contribution limits, or about $1,000 more than if you were under age 50 years old. So if you are over 50, then you could do $8,000. And if you are under 50, then you can do $7,000 per year as a contribution limit. Here are some rules about a Roth IRA for your contributions or even your deposits. So for one, you can withdraw your contributions anytime tax and penalty free. For example, if you put in $20,000 total over the years in your Roth IRA from your own money, you can take out all that money or $20,000 whenever you want without no penalty. In terms of earnings such as growth, dividends, interest, and capital gains, to withdraw earnings tax-free, you must meet 2 conditions. First off, you must be age 59.5 or older, and then secondly, you must have had the Roth IRA open for at least 5 years or the 5-year rule. And finally, if both conditions are met, then your withdrawals of earnings are 100% tax-free. If you withdraw earnings early, like before age 59.5 or before 5 years, you may owe income tax plus a 10% penalty on the earnings portion. For example, if you take growth from your Roth IRA at age 40, you'll likely owe taxes and even penalties as well. Guys, think of it like this. So on your screen right now, I have over $300,000+ in my whole entire portfolio. So let's say that this is only in a Roth IRA, which it is not. It's a Roth IRA, it's my 401k and my brokerage account as well. But let's say for example purposes that this is all in a Roth IRA. So let's say I invest and by the time I'm age 59.5, that I have this money of $300,000. So with all those gains and my dividends, that will be tax-free. Yes, the contributions and even the gains and dividends will be tax-free. So no taxes, which is super crucial because that will actually hurt your overall returns and what you get to keep in retirement as well. So a Roth IRA is super powerful for investors and one that I love to max out every single year. Now, if you guys want to see my whole entire ETF portfolio and exactly whenever I buy all my ETFs and even every single position and so much more, you can see it for free on Blossom. Yes, for free, all on Blossom using the link in the description of this video and in the pinned comment section, and I will see you all there on Blossom. So in this video, guys, I'm going to talk about 6 best ETFs to invest in a Roth IRA. Now, once again, I am not a financial advisor. This is not financial advice. Do your own research and also have a high risk tolerance and always be a motivated long-term investor. So without further ado, let's get started. The first ETF to invest in a Roth IRA is VOO, Vanguard's S&P 500 ETF, where my honorable mention is going to be Vanguard's VTI. Vanguard's VOO is an ETF that invests in the S&P 500 index. Now, this fund also holds 500 of the largest companies that best represent the US economy. So this fund is ideal for investors who want diversification growth, maybe a lower dividend, but also low fees and the full investing experience, and also the best diversification and that peace of mind of holding 500 of the largest companies in the USA. VOO provides diversification across many sectors of the stock market, with its top sectors being technology, followed by financials, consumer discretionary, communication services, and then healthcare. You invest in 500 different companies in just one ETF like this one, which is super cool, and you also invest in some of the most largest and high quality stocks in the stock market like Nvidia, Apple, Microsoft, Amazon, Broadcom, and Meta. The dividend yield is currently 1.14%, and the expense ratio is exactly 0.03% as well. But once again, guys, no shocker, I do hold VOO in my Roth IRA and in my brokerage account as well, because I love this fund so much, and it's a great fund in my opinion for a Roth IRA and even a brokerage account as well. Lastly, the returns from VOO have been remarkable, of just over 16% per year in the last 5 years and even over 15% per year in the last decade. So if you can't beat the market, then just invest in the market or the S&P 500 index, and this ETF of VOO does just that. The second ETF to invest in a Roth IRA is QQQM, Invesco's Nasdaq 100 ETF, where my honorable mention is going to be Vanguard's VGT. Alright guys, I want to make this super clear that QQQM is better, in my opinion, than QQQ. Reason being is because QQQM is the mini version, basically like the lower cost version from an expense ratio standpoint than QQQ. So lower fees, lower costs, and overall, you'll have more money to work with QQQM long term than just only buying QQQ. And yes, I know what you're thinking. They invest in the exact same index of the Nasdaq 100, which holds about 100 non-financial companies and is a tech-heavy index. And this is one that I also own as well, about $50,000 plus. And it's a great fund for long-term investors who have a higher risk tolerance and love technology. QQQM invests mostly in the technology sector, and it also has other sectors for diversification like communication services, consumer discretionary, consumer defensive, and even healthcare to give investors the extra kick of diversification. This ETF invests in 100 large cap companies, with some of its top holdings being Nvidia, Microsoft, Apple, Broadcom, Meta, and Tesla. The dividend yield is approximately 0.47%, and the expense ratio is 0.15%, so also cheaper than QQQ of 0.20%. Lastly, the returns from the underlying index of the Nasdaq 100, which QQQM directly invests in, of course, has been great for investors in this bull market cycle, providing investors returns of over 17% per year in the last 5 years and even over 20% per year in the last decade. The third ETF to invest in a Roth IRA is SCHG, Charles Schwab's US Large Cap Growth ETF, where my honorable mention is going to be Vanguard's VONG. SCHG focuses on investing in large cap US growth stocks, which is great for investors who want growth, higher risk, and also hopefully higher reward. Now this one I also own as well in my Roth IRA, about I think $18,000 with the remaining in a brokerage account. So I do own this one as well in my Roth IRA. Schwab's SCHG also invests in so many sectors of the stock market. With just under 200 different stocks, you also invest in some of the most fastest, largest growing, and high quality names like Nvidia, Apple, Broadcom, Microsoft, Amazon, and Meta. The dividend yield is very small because these growth companies reinvest more profits into growing their businesses, where this ETF has a 0.36% dividend yield, and it also has a low expense ratio of just 0.04%. Lastly, the returns from SCHG have been really good for investors, of just over 15% per year in the last 5 years, and even over 17% per year in the last decade. The fourth ETF to invest in a Roth IRA is going to be SPMO, Invesco's S&P 500 Momentum ETF, where my honorable mention fund is going to be State Street's XNTK. Invesco's SPMO has been one of the most popular ETFs in recent years, and for a good reason. SPMO tracks the S&P 500 Momentum Index, which selects stocks from the S&P 500 that have shown strong recent performance, aka momentum. On the bright side though, SPMO holds stocks from a high quality index like the S&P 500, which are mostly known for high quality, strong performing, and profitable companies. So if you want high growth and are a higher risk investor, this fund could be for you. SPMO sector allocation are high momentum sectors such as technology, which is the top sector, and that one is a no-brainer, followed by financials, consumer discretionary, communication services, and then industrials. With about 100 different stocks, you invest in some of the most highest momentum plays in the stock market like Broadcom, Nvidia, Meta, JP Morgan Chase, Netflix, and Palantir. The dividend yield is 0.64% since SPMO tilts more towards growth leaders than value companies that pay dividends, and also has a 0.13% expense ratio as well. Finally, the returns from SPMO have been super amazing, from momentum doing super good to investors of just under 21% returns per year in the last 5 years because of the strong momentum of this fund of SPMO. The fifth ETF to invest in a Roth IRA is going to be FDVV, Fidelity's high dividend ETF, where my honorable mention is going to be Charles Schwab's SCHD. Fidelity's FDVV invests in large cap and mid cap dividend paying companies that are expected to either sustain or grow these dividends, which are great because if you grow dividends or sustain them, it shows strength, resilience, profitability, and so much more. Overall, high quality dividend paying companies in FDVV. This fund holds over 100 different dividend paying companies that also offer growth and even dividends like Nvidia, Microsoft, Apple, Broadcom, JP Morgan Chase, and Visa. The dividend yield is over 3%, which is super good for a high quality growth and dividend paying ETF like this one, and the expense ratio is 0.16%. So comparing the returns from FDVV to SCHD is super interesting because this fund of FDVV has beaten SCHD by a very wide margin in the last 5 years because of its exposure to technology stocks, where SCHD lacks so much tech exposure, unfortunately, and this fund has the best of both worlds of dividends and growth, the best of both worlds once again. Last but not least is the sixth ETF to invest in a Roth IRA, and that's going to be QQI Neosys Nasdaq 100 High Income ETF, where my honorable mention is going to be Neosys SPYI. Neosys QQI basically invests in the Nasdaq 100 index, a technology-heavy focused fund where it basically sells or writes cover calls on the underlying holdings of the Nasdaq 100 index, and then it uses that income to pay investors high monthly income. And if you want income every single month and also exposure to the Nasdaq 100, this fund could be great for you for both dividends and growth, the best of both worlds once again. The dividend yield is around 14%, where QQI pays monthly dividends from option income, and the expense ratio is 0.68% because this fund does cover calls. So if you want a cover call ETF, this one could be for you. The holdings and sectors are super similar basically to any regular Nasdaq 100 ETF, but this fund's twist is writing cover calls for income to investors, where if you want monthly dividends, it's super high quality in my opinion, and super cool if you want those monthly income, and also has been very stable to investors and reliable for consistent and reliable monthly income, but it does have risks as usual with any ETF. Lastly, the returns from QQI have been super solid for investors who want a cover call ETF. Once again, these funds also limit your upside, so be aware of that, but it's also still beating other high quality funds despite writing cover calls for that monthly income, and is a solid choice for a Roth IRA ETF if you want monthly income and growth as well. Now, if you guys like this video, please give it a like because this cute puppy did. Thank you so much for watching, and once again, this is not financial advice. Do your own research. Investing is risky once again, and check out our last video on your screen. I love you guys so much. Crush on the stock market and take it easy. Peace.